the feeling on the ground here, Russ, is that we're really on the cusp of some good things. I don't want to use the B word, and we're talking about the boom word.
Yeah.
But, when you look at the average home price in Edmonton versus the average home price, again, across the nation, and I'll, zone in on Vancouver and Toronto markets, it's literally 25 cents on the dollar.
All right, everybody, welcome back. Welcome back to the podcast. So if I'm not sure when I'm going to be releasing these ones out, Jay. It'll either be before the out in the field trip in the winter Tunderland, but as you can see here, we're in the nice calm studio. It's nice and warm. We don't have the fuzzy hats on anymore. So if you haven't had a chance to check out that other video, by all means, check that one out where we did a tour of all the different opportunities in the marketplace. Top line, obviously.
Top line, absolutely. Yeah. It's getting boots on the ground, right? Yeah. Seeing what's out there.
But first of all, Jay, it's been, holy moly, oh, Jesus. That's a re-grip with that hand. It's been far too long, my friend.
It's been a while, yeah.
Yeah, it's...
Glad to have you in town.
Yeah, happy to be out here in Edmonton. Jason's opened up his office to me here, and we've been doing some work out in the field here. This is a crazy, super busy office. There's buying, there's selling, there's transactions happening all the time. And for you to free up this time, I'm very grateful and very honored to come here.
Likewise. Thank you very much. Yeah.
And I was just kind of referring to our notes. It's been almost a year, maybe even a year and a half since we probably created a new content. And it's time for an update.
I think maybe even more than that, Russ, maybe in there. But, we all know the last year has been a little bit of a roller coaster ride. And I think, a lot of the content that we as real estate investors should know about is in a lot of cases stuff that's not available. It's not on our Google News feeds and somewhat in our social media channels, but a lot of it flies under the radar. And I think if we can kind of expose that and help investors assess if Edmonton's the right fit for them, that's our mandate.
Yep. So, and I was just reviewing our last notes, and this is going to podcast and also YouTube. So I think, first of all, big congratulations for a lot of the investors that took action. I think we recorded some materials in summer of 2020, and a lot of people took some action at that time, and lots of people bought something, and they're in potential positive equity positions. They may be locked in at a fairly good interest rate. So congratulations for those of you that took action based upon what we recommended at that time.
Well, I tell you what, just giving a little further context to that, and absolutely congratulations, because we all know buying on the right side of a market cycle, and we're still there. But, giving a little context to that, if you bought a property, 2 years ago, you've definitely got some equity, but you're probably sitting in a 5-year fixed mortgage rate, probably in and around the 2% or less.
Yeah.
Right. So, expiring or renewing into the 2025, 2026 range. So really, what an amazing opportunity and ability, more importantly, to ride out the storm that we're in right now.
Yeah. Yeah. So I'm in many, with a lot of my new construction properties, I locked in the threes, and a couple of them in the 3.15. At the time, we're going, oh, why are we doing that, right? But now we're sitting there going, thank goodness we did that in many respects.
Yeah, for sure.
So I think it's high time that we had an update. Are you down for some questions? Are you down for a little bit of an update?
Lay it on me, you bet.
Okay, so we're recording this for all intents and purposes. Whenever you watch it. But let's call it 2023. Okay, so 2023, 2022 interest rates have grown. Markets have actually, in some markets across the country, have fallen. Some markets are holding their own, and some markets in Alberta, Calgary is like an island in and of itself. It's actually had double-digit growth over the past year. Now, I know we're not in Calgary. This is Edmonton.
Yeah.
What would be your best synopsis of what's going on in the Edmonton market right now in, say, 2023?
Well, I think, we're in the midst of a transition, Russ. Yep. I think Calgary, has had a good run. We were in double-digit numbers here in Edmonton too earlier on. Year over year, we're not anymore.
Yep.
We're taking a pause, I think, much like many other metropolitan cities. We're seeing corrections, obviously, in the Vancouver and Toronto housing markets. But in Edmonton, we've really continued to chug along. And I think there's a lot of good reasons for that. Economically, speaking, in the business world and the oil and gas world, but the high interest rates, no doubt, has given pause. And I think for good reason. A lot of our investors really retracted back and were sitting on the sidelines watching. And I really think that was the right move. I think there was a lot of uncertainty going on, and who knew where things were going. We know the Bank of Canada has recently increased rates again, for the 7th time. Now there's a bunch of whisperings that this might be the top. So what's happened is the investors are maybe seeing the top of the cycle, I guess, as far as the interest rate hikes, and activity is starting to really, really increase, especially the last couple of weeks. And past that, moving forward, we know these storms are going to happen.
Yep.
We've owned real estate now 20 some years. This is not the first time this has happened.
Yeah.
I guess we need to prepare for that. And I think buying real estate, we always say keep lots of margin, not only in time in your life, but cash in the bank too, to be able to withstand these storms. Because we are seeing, right or wrong, we are seeing circumstances with investors where they're panicking maybe, or maybe not looking through the right lens, and they're looking to really offload assets now.
Yep.
And like I say, everyone has the reasons behind it, and whether it's right or wrong, that they need to determine that. But I guess from a business standpoint, we know these cycles come and go. And if you're able to persevere through them and get to clear title real estate, well, that's where the real benefit from owning real estate comes in.
Yep. Yep.
Right?
Now, you have your finger on the pulse of some, I would call almost insider information of people you're talking to, things that you're out there. And I know you can't give everything away here, but we'll do our best. So economically speaking, boots on the ground, economic growth, population growth, all those kind of things. What's shaking out here in Edmonton at the moment that you see?
Well, I think our population is growing like crazy. And it's I think just on the verge of some really significant growth. Looking at population projections, and I've got a government document just off to the side here where they're forecasting, the population, of Alberta to grow by 2 million people, in the next 20 years. And we know national immigration, in-migration coming. A lot of those people are coming to Alberta. The percentage is continuing to rise because there's jobs here, and home prices are really affordable comparatively to other markets. Yep. So, you take that into consideration. You look at some of the geopolitical moves that are happening around the world and understanding the demand of energy. The feeling on the ground here, Russ, is that we're really on the cusp of some good things. I don't want to use the B word, and we're talking about the boom word. Yeah. But, when you look at the average home price in Edmonton versus the average home price, again, across the nation, and I'll, zone in on Vancouver and Toronto markets, it's literally 20, 25 cents on the dollar.
Yeah. Yeah. When we pulled up numbers yesterday, you were showing me that it truly is 25 cents on the dollar.
Right.
Yeah.
Now, when you overlay that with affordability, and then we start looking at, average household income in Edmonton comparatively to those other markets, Edmonton kind of jumps to the top where, our average household income is amongst the highest in the nation. Yeah. So, economically, does it make sense for people to live here? And I think a lot of the in-migration, and not only in-migration, internationally, but provincially, people are moving to Alberta. I had to laugh because I was out your way a couple months ago, and I drive by and I see a billboard in Vancouver from the Alberta government, I'm assuming, trying to, entice people to move to Alberta. Yeah. Right?
Yeah, so think about that for a second. Some of the highest income, so people earn more money. Now we just talked housing. Housing is 25 cents on the dollar. Like average house price in the area is 400 and change, give or take.
Well, we're the sales price. So we're using sale price, and we're the condos and the single family are clumped together in this number. Yeah. But at the end of November, it was $368,000, and that's sale price. That's not list price. That's actual sale price.
$368,000 for average home price. So that is affordable. Now that is only just housing, Jay. Yeah. Now when you overlay. What was gas today? $1.20 a liter.
$1.19.
$1.19 a liter. Yeah. When you just there's less, there's no PST. So every dollar you save, you're saving 8% on every consumption dollar you have across the board. There's less probably alcohol tax, cigarette tax, every other kind of tax. Imagine it's much more. Not only do you earn more money here, you actually are more affordable that your dollar goes further here. Is that a safe assessment?
Well, I think that's just common sense. When you start adding that up, there's no land transfer tax.
Yes.
There's really very limited rental restrictions.
Yeah.
So when we do get in these environments in Alberta, the rents have to go up.
Yeah.
And the last 6 to 12 months, the rental rates have gone up here.
Yes, quite significantly.
Significantly,
Yeah.
And I still think from a national perspective, I think we're still undervalued in our rental market.
And I probably have shared this example just recently, and our daughter Emma is out looking for a place out in the suburb of Vancouver, Port Coquitlam. She's looking at a 1-bedroom, 1-bath condo. The rent was $1,750 for a one bed, 1-bath condo.
Wow.
We just rented out our house in Leduc before utilities for was it 19 or just under $2,000 for an entire house?
Yeah.
Right?
Yeah.
So
I think that was just the upper suite. Actually.
That was the suite, upper suite.
The upper suite. Yeah. No, there's no doubt about it. There's and then you look again, comparing all this information and looking at it, and again whether it's right or wrong, but you're asking me for my gut feel, and that gut feel is we're back to where things could potentially bust loose. We've got now a premier in office, right or wrong, she's making some things happen.
Yeah.
And I think it's all good news, really contributing to the momentum of the economic engine of Canada being Alberta.
And one of the things is, I know you mentioned the report you looked at was add another 2 million people to the population. Danielle Smith, whether she's right or wrong, her declaration is to double the population, to add another 4.5 million to the population in 20 some years. Right.
Now this is, I don't want to say smoke and mirrors or information.
Yeah.
When you look at what the city of Edmonton has done with transportation changes and bylaw changes recently, there's no doubt in my mind they are aware of the population increase coming.
Yeah.
The transportation changes again with LRT, with freeway expansion, not only Anthony Henday, the White Mud, the Yellowhead, all of these turning into freeways now, the LRT expansion. And if you ever get time to dive into the 50-year planning and development within the city of Edmonton, they're planning for this already.
Yeah.
Now, on top of that, you see recent bylaw restrictions the other way, relaxations, with parking and increasing of density inner city, and there is a mandate, to increase population within the Anthony Henday Ring Road.
Yeah.
In Edmonton, and I can say this because of Explore Toronto and Vancouver, we have a lot of land here. We're not, and we just keep indefinitely expanding, and there is a cost to that, and it's the transportation utility corridor costs of maintaining boulevards and light standards and mowing grass and snow plowing and all these things. So really, we're set to grow. The mandate is to really increase densification within the current footprint.
Yeah. And that's been one of the, I'm a cheerleader for Edmonton because I think this is a fantastic opportunity. But the big, and I always tell the truth and tell the honest truth to each and every one of you. One of the big downsides to Edmonton has always been sprawl, urban sprawl. Like literally it's like, let's put a new subdivision in. Oh, there's a canola field. Let's just go knock it down and there's a new subdivision. Yeah. So what that has done for those of you, if you're Vancouver and Toronto, where the Places to Grow Act, or Vancouver with mountains and borders and oceans, what that done is has kept the land price down, right? So you're telling me that Edmonton is starting to address this by growing in and up as opposed to out. Is that the case?
It's tax dollars, Russ. So, I mean, at the end of the day, you can sprawl out as big as you want. And Edmonton geographically is very big.
Yeah.
Comparative to Vancouver.
Yeah.
With Vancouver being 3.5 times our population. But it boils down to tax dollars. Like I say, the more you spread out, the more there is to maintain. Like I say, with light standards and roadways and repaving and all these types of things. So yeah, they really want to increase density to the infrastructure's there.
Yep.
To expand. Now we need to expand.
Yeah.
So the city of Edmonton, the government of Alberta have done a great job of getting ahead of that, because you just come from Vancouver and you tell me driving on our freeways versus your freeways. I mean, there is a difference.
Yes.
And there is lots of room for expansion here.
Yeah.
We need the population now to come.
Yeah. So essentially the best way I would describe is the container has been built. Now the people need to be put into it, in essence.
Right.
Right. And the city is planning to densify in, not grow out, because they're already they're happy with the size of the footprint at the moment. Yeah.
To sum it up, I mean, who knows where this thing will grow? I mean, like I say, if you get into planning and development, there is a 50-year plan in play, and but a lot of that plan and a lot of that density is forecasted to come into the inner city inside the Anthony Henday Ring Road.
Yeah, and there's some news articles. One article I just read that Edmonton is truly being seen as the poster child for land use densification rules and progressiveness on expanding the zoning and things like that. Edmonton's one of the most progressive that other cities are looking to Edmonton. Yeah. And I know this for a fact because we were out just yesterday looking at properties. There are some infill opportunities right in the heart of the city, where you can take one house, knock it down, and then when you're done, you could potentially have 6 units on it when you're done. Those are some opportunities.
Absolutely. I mean, on our 3 lots up to 8 units, 8 suites, right? So, I mean, there is significant opportunity in the infill if you got the stomach for it.
Yeah.
Right.
And you have the team and people to do the work.
That's right. I mean, it does. There's no doubt you can participate at a more equitable wholesale level, if you will, but it's definitely more risk associated with it as well.
Totally understand.
Yeah.
Now, just one of the things that when we were doing some videos, probably one of the last ones we published, we were putting it out there and we were walking through each of the different types of property types and, the side-by-sides and the houses with suites and the 4-plexes and 6-plexes and 8-plexes. And when we were doing that, the numbers at that time on a pro forma basis were showing about roughly around $500 cash flows, give or take, on some properties.
Yeah.
What is that reality now in Edmonton?
Probably not going to happen.
Yeah.
Just being completely straight up.
No, please lie to me, Jay.
Yeah. I mean, and Russ, it's not because our economic fundamentals have changed at all.
As a matter of fact, they've gotten better, I believe.
They've gotten better, and I believe they're continuing, even in this environment with, again, geopolitical issues, energy issues going on in the world today. Our economic fundamentals in Alberta are continuing to strengthen, and our employment numbers are showing that. And we haven't even touched on that yet. But I mean, the economics are the employment numbers are super strong, and actually, we're in a job deficit currently. We need people. Yeah. We need people to come
so
to work.
if you need a job, come to Alberta. You'll get one.
It's not
instantly.
Hard. It's not hard. It's not hard. But at the end of the day, you look at these things, and again, I don't want to use that B word, but it's really, we could have some really good things coming in the next couple of years.
Yeah, cusp of a boom. I'm going to say that. We're going to put this video out, and we're going to bookmark it when it came out, and we'll be honest, and we'll do a review each year. And if we made a wrong call, we'll be honest about it. But I believe, based upon what I've seen, we're just on the cusp of it starting to take off again.
Yeah. So one of the key words I used earlier, Russ, is transition. Yeah. And you know what? I think the whole world is transition. I don't think it's Alberta. I don't think it's Edmonton. I think this is really a global thing of transitioning out of a pandemic. The consumer goods went crazy, coming out of a pandemic and revenue at that time when our supply streams and everything were disrupted. It's going to take time.
Yep.
And getting back to cash flow. Yeah, the cash flow in Edmonton today is not as great as it was.
Yeah.
But I tell you what, we've gotten really creative on this side, working with our builders and developers and sellers to maintain cash flow, not only maintain it, but to keep it positive.
Yep.
And looking where things could potentially be 24 months down the road.
Yeah.
We know our rental rates today are rising. I think they're going to continue to rise.
Yep.
Especially in certain market segments, right? And then looking again at population growth coming into it, these are all contributing to, a tighter rein on the rental market, which is probably going to drive demand, which will drive prices.
Yep.
Now, interest rates, we know, and this is just my opinion, I'm not professing to be any sort of economist. It's just grassroots, John Deere tractor, green type opinion.
Yep.
Okay. But I mean, if we can't sustain the interest rates where they are today, and they do come back down into that 3 to 4% range, the cash flow is going to significantly change in Edmonton. And my, in the pro formas, I guess, and where the projections that we're using is we're literally taking, and I'll use a home with a legal secondary suite, for example, is over a 2-year period, we're increasing those rents by $150 over a 2-year period. So $75 a year over 2 suites is the projections that we're using.
Right.
And then knocking the interest rate back down to 4%, it's pretty lucrative game for cash flow in a couple of years' time.
Yeah. And I think you're really underestimating that rental increase too. In some units we were $300-$400 increases this year, like 10% plus on across the board almost.
Yeah, understood. And like I've said a million times, and I haven't had anyone get mad at me yet for making more money. So I mean, it's again, it's a conservative, real approach. I mean, we've got literally dozens of these properties deployed, hundreds of these properties deployed into the marketplace, and we're not grabbing at straws with these numbers. These are live numbers that we're using.
Yeah, and I'll give you credit for being extremely creative and proactive on maintaining cash flows during this challenging time, where somebody just would have threw their hands up and say, oh, victim mentality. It is what it is. Interest rates have gone up, but you've done some really creative things to help maintain cash flows. Now, we don't have the time to go into all those details, but suffice it to say is your business is investors, and you have a vested interest to get good product in front of people.
You're right. That is our business, Russ. We cater to real estate investors, period.
Yeah.
And, as I said earlier, we know these storms are going to come.
Yep.
So we can either sit here and boo-hoo about it and maybe sell our assets, or we can get creative and get a little feisty and figure out ways how to, maintain cash flow. We know, or at least we assume and project this to be a shorter term storm. But, my opinion, again, John Deere Green opinion, it could take 2 years.
Yep.
Hopefully less, but it could take 2 years for things to settle out. So in the meantime, this pressure that we're seeing, this inflationary pressure, has calmed the real estate market.
Yes.
We've seen prices really stabilize. We've seen new construction prices actually come down, to a point to where we were probably 18 months ago again.
Yep.
If you watch lumber futures, you can see the price of lumber's right back down. There's a little bit of pressure, I guess, on the labor force now to maintain this stuff. But what this equates to is really our acquisition cost of the assets is really back to where we were almost 18 months ago.
Right.
Especially on the new construction side. The resale market never did see that big jump that the new construction market did last year. Because the resale market's obviously driven, more on comparative market analysis, where the new construction market is based on the, supply of goods and materials and labor.
Right.
And when we saw that inflationary environment take off, well, so did new construction prices.
Yep.
Things have simmered back down. And really, at the end of the day, if you can acquire a property now and you can save $10,000, $20,000, $30,000 versus buying it, in 12 months' time when everyone else dives back in and everyone sees the golden light at the end of the tunnel, is it worth it?
Yep.
Right? And I can't answer that for people. Like I say, at the end of the day, this is something that I can give the information in front. We can look at the reality of the prices coming down. And are you better off to wait? Are you better off to buy today and work with us to maintain cash flow?
Yep.
Right? It's not going to be juicy, but it's going to maintain, it's going to pay for itself. And in 2 years' time, now you're set.
Yeah, in 2 years, you've got 2 more rental increases, and you've got potentially new interest rate environments. Maybe you've taken shorter term positions on mortgage rates. Like, I'm recommending most people take like a 1 to 2 year fixed term right now, because that's pretty good numbers. Like, don't lock in. Right, and then if they start changing in the other way, you reset your interest rate. You get a new rental rate. Now we're talking about that's cash flow, like significantly more. And then at the same time, you had 2 years of mortgage pay down, and arguably that could be another $20,000 or $30,000 in equity built up.
Right. So when you start looking, and I'm glad you're bringing that up, because it's not all about the cash flow in real estate investment. There's the mortgage principal pay down portion of it, and obviously the capital appreciation portion of it.
Yeah.
And we're talking about saving on the asset acquisition value, but what are the real estate prices going to do in the next 2 years in Edmonton? Are they going to stay flat? Well, if they do, great. Are they going to come down? Or is the potential for them to go up based on what we're seeing?
Yeah.
So again, you start laying out all these numbers and you start looking at the big picture, it very well might make sense for people to, at least lock in their contract today on a new build. And we're closing on this thing, probably next summer, fall anyhow.
Yeah.
So it will insulate, I guess, from, the inflationary environment or the higher interest rate environment another 10 to 12 months potentially.
Yeah. So what is some of the projects that you're seeing on the go that are happening and I'm not going to hold your feet to exact details and when and how much, but there's some pretty large projects that's going on up in the industrial heartland and areas like that. What are some of the things that you have as somebody who lives here that's not in the mainstream media of this kind of stuff? What are some of the things that you're seeing and hearing on the ground?
Well, I think, I'll first start by saying what is actually in motion and everyone knows about it. I mean, the Trans Mountain Pipeline has been approved. It's been in progress and it's set to open mid-2023.
Actually, ground zero and where the pipe goes into the ground actually is what, about a kilometer, half a kilometer from here?
Yeah, exactly. We're really close to ground zero on that pipeline. But, that's going to create significant opportunity for distribution, which we've never had.
Yeah.
Our big distribution right now is to our neighbors to the south.
Yeah, or rail.
Via rail, via truck. We do have pipelines, obviously, going down there. For those of you that don't know, the the Keystone Pipeline, I know Biden vetoed the bill, but we need to understand this pipeline's already there. It exists and it ships about 600,000 barrels a day of Alberta oil down to Steel City, Nebraska. So these things are all, in a lot of cases, flying under the radar, which is fine. The other thing, I guess, in Edmonton that we haven't had is a lot of, since the inception of the Alberta oil sands, we've never really been able to, refine or distribute high-end profitable product.
Yeah.
The Alberta industrial heartland is changing that. It's very energy centric, not only on oil and gas and innovating our oil and gas industry where we're at today, but also, there is a 58 megawatt solar farm out there. There's also the hydrogen plant. And I almost had to laugh because there was an announcement literally a couple of weeks ago of the federal government pledging $500 million to complete this hydrogen project. Yep. Which was 375 and another 125 provincial. But at the end of the day, it barely made the teleprompter across the 6 o'clock news. And I'm sure it didn't hit the news out in your neck of the woods.
But if we didn't talk, I wouldn't have known.
Right. So you look at some of the innovation and projects that are happening in Alberta, $45 billion in capital projects on our doorstep in Northeast Edmonton. It's pretty substantial. Yeah. And again, this is an economic fundamental that could potentially, I don't say will, but could potentially drive our housing prices because it's attracting workers and workers and workers and workers, high paying jobs.
Yeah. And if any of you have been in this market in Alberta for a while, I'm starting to see things line up like I was seeing in, 03, 04, 05, 06 of those kind of things, especially the one that I'm tracking, which I saw was the population numbers. Like I think in the last quarter, it was the highest in 15 years or something like that of interprovincial migration.
Yes.
Now, we're not even talking immigration of immigrants coming in too, which Alberta is one of the second highest in the country for immigrants as well.
For now.
Yeah, for now. Probably even getting higher. So interprovincial are coming in. International are coming in. And all these projects, all those things, I just sit there and I look at when you have $45 billion worth of capital projects, those equal jobs. Jobs attract people. People move to the job. People have to live somewhere. And when people move into a market to start, they typically rent. And, oh, by the way, I want to have a rental property available for those people that are making good money, right? And then eventually they might stick around. They may buy. They might fall in love with the Pierogi Festival and the Daffodil Festival and all the River Valley festivals, and they'll stick around in Edmonton and buy a place.
Yeah, Russ, I think you're probably seeing that fairly straight. we've seen actually investors that have jobs that they can do from their home.
Yep.
That are moving to Edmonton and taking up the house hacking model, if you will, you know, and moving here. But really, from the immigration standpoint, interprovincial is one thing that's, you know, I think the easiest path of immigration. The international aspect of it is, yeah, you're seeing a lot of people coming from warmer climates that are willing to put up with a little bit of -30 once in a while, a little bit of snow, you know, a few mosquitoes in the summertime, because you can buy a nice 3-bedroom home here, you know, for $350,000 to $450,000.
Yeah.
You know, in a lot of cases, you can buy a brand new one for that.
Yeah. Well,
So
I know very well these numbers I'm just talking about here. Is there's a wonderful little half duplex model, nice 3-bedroom, is it 2.5 or 1.5?
Which one?
My place. Here's the thing: is I can't even remember how many bathrooms.
Oh no, it's 2 bathrooms.
It's 2 bathroom. 2 bathroom. Fixed up when we put a little bit of time and effort into it, will sell for $250,000.
Right.
Right, and that's like that, and that's a nice place, right?
With a single attached
garage and a basement.
Yeah.
And back home, you know, our kids are looking at townhomes in the $600,000 to $800,000 range, like for a townhome, which is not even similar. Like you're truly paying 3 times the amount now.
It just doesn't make sense.
No.
I mean, I'm a pretty simple guy. I will be the first to admit that. But I mean, I like to keep common sense in the room.
Yep.
And this just isn't making sense right now to be buying, I guess, assets in those markets. You know, and just, you know, it is what it is. But I mean, it probably hasn't made sense in the last couple of years for me. And, you know, I think life is all about experience. And you know what? I experienced that here in Edmonton. Was our last real estate boom, Russ. We know, you know, in 2006, 7, and 8, where our prices went up, I think 21%, 27%, and in 2007, 51% in 1 year.
Yeah.
You know, and guess what happened? I personally got caught up in the equity drunk, and I bought properties. You know, I still own them today. I've managed to maintain them and continue paying them down. You know, but in September of 2008, when the plug pulled out, you know, the value of real estate dropped, you know, and the interest rates went up. If we back up in June of 2008, I think we're at 5.75 prime interest rate back then.
Yep.
So very similar to what we're seeing today, you know. So again, I'll relate this message to, you know, buying on the right side of a real estate cycle. We know you can spend time in the market. Great. If you're willing to wait 30 years, buy a property, it'll work.
Yeah.
But I also can say, based on personal experience, buying on the right side and getting cash flow and contributing that cash flow to mortgage principal reduction or using it to buy more assets is a way better use of capital.
Yep.
Right.
Now, I hear something out there all the time, you know, it's not timing the market, it's time in the market. So I 100% agree with that. It's time in the market is more important. But at the same time, they don't have to be mutually exclusive. And hear me out for a second.
All right.
If somebody in Ontario bought a place in April of 2022 versus buying it in December of 2022, don't you think that timing would make a difference to them? In some cases, I've seen properties down a couple $100,000 in that period of time. Exact same places. Now, I totally agree that you need to be in the market long term in order to reap it. But if you bought it for $250,000 less, chances are you're probably going to make more money in the future, right? So timing does matter, does it not?
Well, I couldn't have said it better. I think if you have the ability to time it, it will make a difference during your term of ownership.
Yeah. Now, the thing is, you're never going to get it perfect. You're never going to get it right. And only hindsight can tell you whether to get it right or wrong, right? But at the same time, be cognizant of the time you're investing into it. Like when in the season, not the weather season, but the season of a cycle, be very mindful of when you're getting in.
Well, 110%. Let me give you a live example. I just said I bought real estate in 2007.
Yep.
I wasn't the only one. Many people did, right? You know, but I mean, it was, I keep using the term equity drunk. It was, you know, everyone was diving in.
Yeah.
What happened after the fact? Okay, I bought the property. I still own them today and I've regulated.
Yeah.
But the 5 years past were quite painful for me. And I'll tell you why. Is because the interest rates went up and I got caught holding a property that had devalued,
Yep.
And the rental market wasn't going up either. So I got put in a position holding a property that had devalued and in some cases was down to mortgage value
Yep.
that I couldn't, maybe would have had to stroke a check to get rid of.
Yep.
And again, this relates to holding that property and having to put capital on it and support negative cash flow.
Yep.
Versus, I tell you, some of the properties I've bought in the last 10 years have been the opposite, where I've made $500-600 a month cash flow from them,
Yep.
and I've been able to contribute down every year a little lump sum down on mortgage.
Yeah,
principal
you're snowballing your mortgages to pay off on your new construction. The thing is, your older properties, you're actually almost having to take money from your new construction to pay the maintenance bill on your older stuff just to keep them going. But you're at a point where they're almost fairly low in mortgage value. And I think the comment you made to me on one of our wonderful phone calls is, I've put so much time and effort into work into these properties, they're going to start paying me soon.
Well, exactly. I mean, and there's been reno bills along
Yep.
the way and stuff, but I've always said the real benefit of real estate comes when you get to clear title asset.
Yeah.
To where you get to exercise the Bank of Hip Pocket First National deposits at
Yep.
least, right?
Clear title. That's like, some people think of that as a swear word. I don't know why, but some people.
Well,
think.
and I understand that.
Yeah.
And like I say, everyone has a different plan of what they're trying to do with this. But, for myself personally, this is part of my retirement plan, and I want the passive income from these assets. And I want to still own the assets because this gives me now options. I have passive income, plus I still own the assets. So, if I want to attempt to be my own banker, I probably can.
Well, and here's an exercise. I don't mean to go too much of a tangent, but here's an exercise I walk a lot of people through. Like when I have a consultation with people, they tell me kind of bottom line, what's your cash flow number? Let's say it was $1,000. Okay, awesome. What's your mortgage payment per month? And they'll go, well, geez, I'm just going to make a number up. So let's say it was $6,000 a month in mortgage payments across things. I go, okay. So if you didn't have that $6,000 a month mortgage payment, what would your cash flow be? Now, it's not a trick math question.
Wow.
What would your cash flow be? It would be $7,000 a month.
Right.
So if your portfolio was free and clear, $7,000 a month is now potentially retirement money that you could potentially retire off of.
I'm glad you were paying attention to that math. It makes sense though, right?
Yeah.
Like
and it doesn't have to be that complex. It's just whatever you're making in your mortgage payment. If you didn't have that, that would be free. That would be cash flow, right? So you add that to what you're currently getting cash flow. So then the question I often ask people is, so what's the valuation of your portfolio? What's the mortgage balance? And let's just make a number up. And let's say it's $10 million. Okay, what's the plan to pay off the $10 million in the next 10 years? Right. Now, I know that's a big number and some people just gasp at that, but I've seen people do it in faster time frames, to be honest.
But you got to understand, if you have $10 million of mortgage value, your asset value is probably quite a bit higher.
Significantly, yeah.
Right. So, I mean, this is front loaded to where it does start on the front side, but you every year that goes by, you gain equity. The best time of year, Russ, is what? Getting your mortgage statements every year,
which is right around this time of year,
right? And seeing the equity that, especially once you get past year 10 in your amortizations, you really start chunking mortgages down. So it gives you options, but you're right, and that's my mentality. I'm not saying it's right or wrong, is to buy assets and to pay for them and to be smart with them and upgrade them if needed. I mean. Everything has an effective age and time, and I think throughout the process of ownership with real estate, you have to make decisions. Even buying new construction, if you hold on to them for 15 years, you're eventually going to have to make a decision. Well, do I restore this property, or do I just take that equity and move it into another new one
and pass on that maintenance on to the next owner?
Right. Well, right. And there is a plan for that, and I employ it myself personally, but. I'm not saying that's right or wrong. It's just maybe the niche that we've figured out to get to the end zone, right? Of where we want to be at a specific time in the future.
Got it. Pivoting the conversation here a little bit. So good majority of the clientele that comes in that's, wanting to book a consultation and find out if this is a good opportunity or whatever, majority of them are out of town. So they're investing from a distance, right? I had to fly in to come here to see things and stuff like that. And majority of your business is people out of town. And so how does somebody do this long distance wise? Like, give me some simple steps for somebody to take if they're out of town and they're looking to invest in Edmonton, but they don't live here.
Well, I think Russ, it just starts with a phone call, really, and understanding just everything we just talked about of understanding of where they're going. Where are you at today and where are you headed, right? And I think once we can determine that place in the future of where they want to be and what they need to accomplish that, we can really start, for lack of better terms, reverse engineering the path to get there. And that path is probably understanding if, Edmonton's the right fit, and, understanding if we and our services are the right fit. And then lastly, the property type, and making sure that we're inserting an asset into these families that is actually going to give them what they want. Now, past that, once we, again, have that understanding, we've got the connections here, the relationships. I shouldn't say connections, they're relationships, right? These are people that we know, we use, we trust, and that's builders, developers, there's property managers, lawyers, mortgage brokers along the way, and then on top of the maintenance side, all the contractors and the furnace suppliers and stuff that you need. We open that up because at the end of the day, we trust these people. We're confident in their ability to deliver a great service. And I think it's more probably individual relationship for each investor. I'll open the Rolodex up here. You use these people. I trust them. You phone them and see if you can strike up a great relationship, because I guess, it's the old adage, maybe not what you know, it's who you know. That does ring true in real estate, but the relationships are so important, especially if you're investing long distance. Now, I'm not saying you can't pick up the phone and do this yourself. Of course you can. It's going to take time and effort and probably some trial and tribulation to find the right relationships and the right skill sets that you actually need. And a lot of that to do is either it's after the fact. What we do in the acquisition process is the fun, easy part. It's easy. We've got a nice accountable process, keeps everyone in the loop. Everyone knows where everything's at. Great. Then we hand the keys to your management team. This is where the rubber hits the road. So if you're self-managing, and we have a lot of customers that live abroad and self-manage, I shouldn't say abroad, but out of town, long distance and self-manage. Or if you have a property manager, that's great. But the maintenance and the ongoing relationships that you're going to need moving forward are probably the more important ones. And I'm going to give you guys so here's a hot take, and a hot tip is somebody who is an out of town investor, which is myself. Edmonton is a big city. Right? It is. There's, it has a small town feel to it. For some reason, it has a small town community feel, right? But it is a big city, and there are in this city, as opposed to many different cities across the country, there's some areas that are not good areas. Like, truly. So one of the best things you need to have, take it from one out-of-town investor to another, if you're coming from out of town, is you need to have boots on the ground, somebody who knows the market, somebody who will tell you the truth, somebody who will give you real talk on area by area specifics. And that's why I always come to you about talking about this. I send it to you all the time. What about this area? What about this area? And I'm not going to repeat some of your answers, but you just tell the truth of an area. And how do I know this? And how did Jay know that? Is because I've invested in a lot of bad areas in this town, and I've learned the lessons. And it's just like, not going to do that. Both of us had a lot more hair about 15 years ago. Well, that's both of us. There's areas definitely we want to avoid. Right. Now, on the flip side to that, Russ, there's areas that we want to focus on.
100%.
As investors. And I'm not going to be disrespectful to my industry colleagues, but if we're looking at it from a present day, hey, where's the best place to buy a property? Southwest Edmonton. Well, I'm not going to disagree with that, but I think there's other areas that will produce a higher return. Again, not based on cash flow and mortgage principal reduction, maybe on appreciation. Based on transportation changes and where the population is growing and where the jobs are coming. But these are things, again, if you can appreciate at 1% higher level, which is possible, very possible. We've got the proofs in the pudding. It is going to make a difference, throughout your term of ownership. And we know, Russ, we've made mistakes, right? We've publicly shared these mistakes, and that's okay, right? If we can save the road bumps, I guess, along the way that we went through, I think that's the right thing to do.
You were just telling me a story this morning about a group of people that were coming to town to buy a place, and it was on the surface, it looked like it was a cheap asset. It was it looked like it was an apartment building. It looked like it had a good, price point to it on paper. And what was your advice that you gave to them?
I told them not to buy it.
Yeah. And why? But you would have representative and maybe brokered the deal, and you would have got a commission check out of it, wouldn't you? Potentially, right?
Yeah. But you know what? It's, again, this is the fun, easy part.
Yeah.
I am so mindful of years 2 through 15 or 2 through 10 or whatever your timeline is. It's really the ongoing management and our financial statements moving forward. Anyone can pick up and phone a realtor and put an offer in.
Yeah.
Shit, that's easy, right? We can do that this afternoon if we want.
Well, let's do it this afternoon.
Okay.
Okay.
But again, it's these things in these buildings that either are going to chew into your financial statement.
Yeah.
Russ, and they're always the same things. It's your repair and maintenance cost.
Yeah.
It's your vacancy tenant turnover is a huge one, right? And it's your management costs. And your management costs are unfortunately associated probably to these two items.
Yeah.
So looking forward in your financial statements, if we can regulate these variables by just being smart at acquisition, right? It makes sense. It puts cash flow in your pocket.
Yeah.
You get to keep it.
Yeah.
There's no sense making all that cash flow and having to give it out to other people. Why the hell would we do that?
Well, and that's some of the things that people will sit there and go, yeah, I love Edmonton, sounds great. Price points sound great. Rent sounds great. Holy moly, I can pick up this place in Alberta Avenue for a fourplex for, $600,000 or whatever the numbers are. And you sit there going, yeah, but the deferred maintenance is probably almost equal to what you paid for the property. So there's just, the point I'm trying to get to, gang, is be mindful of the areas, have a good expert on your side to be able to show you the areas and not just come at it from a standpoint of trying to sell something to you as a commission, come at it from a standpoint of matching the right asset to you to make sure it fits long-term with your lifestyle goals, your financial goals. And that's one of the reasons why we talk, is you actually provide a bigger, more of a boutique service than any quote unquote, and I'm not using this in a negative term, a realtor service, if you will. You have a different process here. So talk to me a bit about your process.
You're right, Russ. It's completely different. Yeah. If anyone out there is looking for, to get put on a property drip.
Yeah, an MLS.
An MLS.
Set me up on an MLS email search or something.
It's probably not going to happen here. We're very focused on, again, procuring the right assets. And it's not, what I want, and respectfully, a lot of times not what the client wants. We've got all customers, tenants, that are paying, in some cases, $30,000, $40,000 to live in these properties every year. We need to cater to them a little bit. Yeah. And of course, be mindful from an owner perspective and make sure that we're, getting the specification and to maintain tenancy with very low maintenance and very low management fees. Yep. That's our mandate. Yep. Our tenants is to have the best house they can get for the cheapest. Okay, get that. But there's also this thing called the market that actually regulates that for us. Yep. Right? But when you start, and I'm going to plug new construction here a little bit, but when you start, and we have the ability to sit down with our builder groups and really procure assets that are going to serve its intended purpose. Okay? So things like, parking. Separate entrances, separate laundry facilities, separate air exchange, separate heating controls. All these types of things contribute to maintaining tenancy, because tenants' issues will cause tenants to leave. And those issues, Russ, are always the same darn things. It's noise, smell, privacy, parking. So when you go pluck a house off MLS, it is what it is. You can't change that stuff.
Yeah, it's round peg, square hole.
Right. Yeah. And then you try and find a tenant. Yeah. Quite frankly, we do the opposite. We know exactly the tenant profile we're targeting. Yeah. Actually, 3 of them, right? And we cater to those people. And when we look at the bills, this is who we're finding. Yeah. It's not rocket science. It's not trying to, I guess, as you alluded to, trying to find a property that may or may not work and you don't know who you're attracting. You have to understand who you want to do business with. Yeah. And that's that customer. That's that tenant. Yeah. Right? Yeah.
And I'm just going to, not that I'm pumping your tires here for a second, but you're an absolute savant when it comes to taking a look at a property, taking a look at a a piece of land. And we were, case in point, yesterday we were out looking at this place, an inner city one that I'm very serious about looking at and maybe putting an offer in. Jay, we need to submit that offer, by the way, about doing it. And you just sit there and go, okay, now if I was doing this, it's almost like, have you ever seen The Good Doctor? You ever watched The Good Doctor?
Yes.
When Sean Murphy sits there, Dr. Murphy, and Sean Murphy sits there and he sees how the things all thing together and he visualizes all these things. That's like what's going on in Jason's mind out there. And he sits there and goes, well, what I do is make sure this house, you can move the garage closer here, the parking pads, you put one in the front over there. The tenant's going to walk from this side of the house over to here, so you put a walkway here. And I'm just sitting there going, holy moly! Like you're brilliant at that. And I'm not, like I said, I'm not pumping your tires on that, but you see this as an investor, and you're one of the best I know at this.
Well, thank you. I really do appreciate that.
Yeah.
It's not by being a rocket science, that's for sure. It's really trial and error, and it's really, again, just based on functionality. If you have a business model, and you're going into business, would it not make sense to cater to your customer?
Yeah. That's good business. Business 101.
That's good business. Boy, you watch McDonald's and all these big chains, how they pay attention to their customer. Right? And bring out burgers at specific times a year and all this stuff, paying attention to their customer. That's all I've done, Russ. Is really just get feedback from our tenants, our management teams, our owners, and really do something with that information. Right? And just continually, it's just a constant iteration. It never stops. And it's a moving target. The property type that I would have put in front of you 15 years ago is not the same property type that I would put in front of you today.
Absolutely.
Too much has changed, right? But it's a moving target. And we can either just, like I say, sit here and plug listings at people. That's not our business. Again, our business is to make sure we put the right assets in front of people, that are actually going to give them what they want.
And have a good experience as opposed to a crappy one. Right.
Well, we see lots of those, and this isn't like going out and buying a new car. You screw up and you don't like the car, you can go trade it off next week and then maybe lose a couple of grand. This is much more involved. Right?
This is a long-term financial asset. In some cases, this is people's pension plans. Right? It's in this asset as opposed to having it in a mutual fund or a company, an old teachers, the Ontario teachers pension plan or whatever. This is your pension plan. No, this is serious business, right? And just getting the right asset at the right time in the right area that has a good opportunity. I think that's absolutely brilliant. Okay, so if somebody's been listening to this or watching this and they're maybe interested in getting some further information and maybe they want to take a look at under the hood of Edmonton a little bit more, what's the next step in the process for somebody? Well,
I think easy. They can either go to our website, tryurban.com, or I'll even give my email address, jason@tryurban.com. It's just reach out. Like I say, it starts with a conversation, Russ, no strings attached. You know what? I'm willing to give anyone, 15, 30 minutes and hear them out. And really that's the first step. And I think the competitive advantage in today's world, we all have choices. And I think we just need to make sure that, as I said, the 3 check boxes, make sure that Edmonton fits, make sure that we in our organization here are fit and our services are fit. And then, the conversations roll into property types and start looking at live opportunities. But it's a little bit more involved. I'll be honest with you. We're careful in that approach. We're very strategic in that approach because it works. And I think if people are willing to, give us an opportunity to earn their trust and show them, and create value first. It makes for a very strong relationship, and that's what we're after, Russ. We're not after transactions here. We're after relationships because that's the salt of our business, and that's my personality.
I hear you. Right. Well, why don't we leave it there? So a couple things I'm going to ask of you is you're interested in keep continuing the conversation about you and I and doing a regular, let's not wait another year or so for our next video. You're interested in continuing the conversation, delivering more content for everybody?
Russ, I almost think we have to, because there is a lot of value, I think, in this. At least I think there is. Hopefully you guys do too. But at the end of the day, it's really just delivering information. We all know decisions are made out there. Get that. And we want, I think, just to enable with good information enable good decisions. And end of story.
Absolutely. Yeah. And I think it's time. I think it's just about lunchtime because I hear my stomach gurgle. And I'm making.
That is? I thought it was something else.
I'm actually. I think if I actually go back through a lot of our videos that we do, I think every single one of them ends with we need to go eat. Yeah. So I think everybody's watching goes, geez, you guys eat an awful lot while you're out there.
I'm not one to turn down a meal. I'll admit that.
So, gang, if you are interested, this is my go-to source in Edmonton, and I'm happy to. Quite frankly, I shouldn't share you, but I'm very happy to share Jason. He is my trusted relationship and my trusted go-to source in the Edmonton marketplace. So if you are interested, Jason's word is as good as gold. He is one of the most trustworthy people you will find. And if you're interested, I can't highly recommend his services enough. Final word for you, my friend, before we sign off.
Thank you, Russ. Those are very kind words. And you know what? There is lots to go around. Yeah. It's just again, I know everyone tries to covet, but there's lots of good deals out there, people. We just make them happen. You can either sit and wait for MLS, but honestly, we've got over 50 projects in procurement right now, under construction at various stages. There's lots of opportunity to go around, but it starts with a phone call. Reach out. We'd be happy to hear from you. Yeah.
And I know we're kind of just talking about you on one surface level of, helping people get into a property. Jason and I, more so I'd say, Jason, you're first and foremost, you're a real estate investor, right? We were the last 2 days we've been working together for a day and a half, and the projects this guy's got on the go, you got some very exciting initiatives, and you love real estate. You're a real estate investor, right? You're like that combination of somebody who can find properties for people, but more importantly, you break trail and you buy things yourself in order to recommend that to your clientele.
Russ, I don't know any other way.
Yeah.
Because I can take that information that I guess use myself as the guinea pig.
Yeah.
And really make it better and get it to a point where we can now have confidence in it.
Yeah.
And again, you said it correct. It's not about selling. It's just making sure we got something that works for other people. And that's it. So
the point I'm trying to make here at the end is, are you open that we can have some more conversations in the future? And we can talk more about some of your projects that you have gone. Some really exciting things on the go. Like, honest to goodness, I was sitting there and I was so fired up after our F350. You got a new truck just recently in order to tow the fifth wheel, right? That you're soon to get. If you're open to it, maybe we'll share a few more details of some upcoming exciting projects. So
I would love to. Yeah. And at the end of the day, I hope we can inspire people to take action, because I've said it and I'll continue to say it. What we do is not anything out of the ordinary. It's no rocket science. It's just hard nose, sniffing out opportunities, knowing how to analyze them from an overall perspective and making it happen. End of story.
Yeah, and I call it
getting greedy.
I call it being a PhD, pig-headed determination.
Okay, that sums it up.
Right on, my friend. Right on. Well, gang, stay tuned. There'll be more details coming up. And you know the drill. If you're watching this on YouTube, make sure you leave a comment, like, subscribe, share it. If you're listening to it on podcast, leave a review and share it. And most importantly, if you're interested in Edmonton, give this guy a shout. Okay, bye for now, guys. Well, looky here. You made it right to the very end. So I think you should be rewarded. Here's your reward for you. Number one, before you get the next video to watch, hit the button below to subscribe. And there's a hand-selected playlist and a hand-selected video here for you to continue your journey forward. Let's continue this momentum. Let's go.